Thank you so much, Leonardo, for your words, kind words. I would immediately move to our introductory speech by Ananya Kumar. Ananya Kumar is the Assistant Director of Digital Currencies at the Atlantic Council Geoeconomic Center. So, Ananya, I see you are connected, and the floor is yours.
Thank you, Stefano. Thank you, EDPS, for having me today. Can everyone hear me all right? Great.
Very good.
Thank you. I will ask for one more technical check, which is sharing my screen. Great. Can everyone see my screen?
Perfect. Yes.
Great. Thank you, everyone, for joining me today. Like we talked about, my name is Ananya Kumar. I'm the Associate Director at the Geoeconomic Center at the Atlantic Council. My research primarily relates to two questions. I manage our Future of Money work at the Geoeconomic Center, and my questions are very simple, which is that what is the form and function of money going to look like in the future, and what is the architecture that enables it? I say it is simple, but it is quite a complicated topic that we dive into. And at the center, we look at central bank digital currencies, we look at stable coins, we look at payments options more generally. Today, I'll be providing a level setting conversation, trying to enter into some of the questions around design and how it is that CBDCs are different than the current payments options that are available to us. So I'm really looking forward to this conversation today. I want to start with sort of a simple idea, which is that at the center, we started looking at CBDCs. The reason we started looking was because my boss came from the IMF, where some countries in 2017 had started developing CBDCs and had started coming to the IMF with the questions regarding CBDCs. So really in 2020, we began tracking them, and we wanted to see where countries were in their development. There were 35 countries in 2020, and leading amongst them, obviously, was China's project, the ECNY. And I'll show you a picture of the first version of our tracker, and you'll see China in green here. And the rest of the world, kind of trying to figure out what is happening in CBDC. But like I said, there were 35 countries only. I did a review of our project in June of 2022, so this year, and now we look at 112 countries. So we've seen a three-time jump, more than three-time jump here, which represent more than 95% of global GDP. So really, a majority of the world is looking at CBDCs. Just to give you a context, this is what the map looks like. It's not just a little bit more modernized, but it's a lot more filled out. You see emerging markets entering the game a little bit more. You see more countries joining China when it comes to leading the development of CBDCs. But it's not just China, right? There are 11 countries, which includes countries in the Caribbean, which are more commonly talked about, but two of Africa's large economies, Nigeria, Ghana, that have launched CBDCs. 16 are in the pilot stage of CBDC. So really this includes testing a proof of concept, whether wholesale or retail. This definitely includes some of the biggest economies in the world, and importantly, includes the G20 economies here. And 27 countries are in the development stage of CBDC. This includes the United States, the Eurozone. We'll talk about the digital euro a lot today, I assume. So countries that are really also in the G20, also getting in the game and trying to figure out what it is that CBDCs are. And 46 countries are in the research stage. This includes a lot of emerging market economies and countries that I think have taken longer to get to CBDC development. But really what I want us to think about is what happened over the last 2 years that made this threefold jump into CBDCs. That is kind of the entry point I want us to have before we get into the conversation about design. So what happened in the last 2 years? Obviously, the pandemic, and which induced quantitative easing unlike anything we'd seen before. And what countries realized while doing quantitative easing and providing fiscal stimuluses was that their process of doing that was extremely antiquated. Here in the United States, when we got our stimulus checks, it took us 3 weeks to get a check. It took that check at least 3 more weeks to clear and show up in my bank account. Now, if I was relying on that check to pay my rent, it would have been really, really difficult to do it. It's an antiquated process that took a lot of money and took a lot of time, and countries started thinking about more efficient ways to do stimuluses, really. The second thing is the creation of Libra or DM project. This happens, you see this headline from 2021. It really started happening in 2020. This giant mega social media platform says it's going to get into the payments game. And countries really started thinking about their role in the payments game. Hey, if Facebook can make something more efficient, A, why can't we? And B, what is it going to do with our monetary authority in our country? And I think that really, really, you can see the effect of Libra DM in current regulations as well. Amica is a good example, which specifically is targeting entities like DM, which, sadly kind of don't exist anymore. But the legacy of DM still exists in a lot of regulation that's talking about payments and innovation now. And the third really was China's ECNY pilot. China began studying the ECNY. At the time, it was called DCEP, Digital Currency Electronic Payments System, and it started studying it in 2017. In around 2019, 2020, it started piloting that ECNY in a few regions and started piloting it in a very interesting way. It started airdropping some money, it started giving out money to people. It did it most famously, it did during the Beijing Olympics. And there's about over 300 million people using the ECNY today. And we can talk about adoption rates and things like that, but that really, I think, got countries to think about what is it that what role could they play in CBDC development. So what do these developments look like today? Like I talked about, we're looking at 112 countries, and 105 of them are exploring CBDCs. There's a lot of dormant projects here as well. I can most famously think of Senegal, where there hasn't been any movement in a while, but there's also Lebanon, countries that have indicated an interest but really haven't done anything about it. But really, a number I want us to focus on is this high of 50 countries, so more than half of them, that are in the advanced phases of exploration. So, what we think of at the Atlantic Council as the advanced phase of exploration is something like a proof of concept, testing that proof of concept using a pilot, or a launch of the project. And this is beyond research. This is beyond a country just indicating interest. And for context, I would say the EU and the US are both in the development phase of their exploration. And this is just to show you a little bit of a functionality of our tracker. I'll share some links after, but you can really go into every country, all the 112 countries, and look at what their developments look like, what the history of that development looked like. And we find this to be a very useful tool. And I hope you do too, and we're looking forward to feedback as well. Some other important CBDC developments, they're really clustered around emerging market economies. So if the G7 economies, the US and the UK are furthest behind in CBDC development, the EU has far surpassed them, as is given by the ECB's recent announcements. The US and the UK have just moved beyond their research phase, more hesitant. Obviously, big banks are concerned about sort of the role of the dollar, the role of the pound, the role of the euro in the global economy as well. Of the G20 economies, I find this to be a fascinating stat. 17 are already in development or pilot stage. So a large majority of them have moved beyond just a beyond research stage. And the one G20 economy that's not exploring a CBDC is Argentina. And given their high inflation and other kinds of economic crisis, I think it's probably coming, but we haven't heard anything from them yet. But each of these countries in the G20 has made significant progress just in the last 6 months. They've released a lot of proof of concepts and papers. Again, just showing a G20 view here. We'll click to see Russia, Obviously, the two big questions I get about in the G20 are Russia and China quite often, and see where they are in their project, and happy to answer sort of those questions as well later in in the project. But really, what I wanted us to talk about as we get into later conversations about design and functionality of CBDCs, privacy, anonymity, transactions per second, is, does the ideal CBDC exist? What is this ideal CBDC, and how do we get there? And at the end of the day, is it going to accomplish all the things we want it to accomplish? So that's kind of what my focus is going to be over the next 5 minutes, and just orienting everyone. First, I want us to look at what countries are motivated by when they look at CBDC projects. Something that we hear a lot from countries is financial inclusion, is incorporating the unbanked and underbanked populations into the financial architecture and financial system. This definitely is a concern that comes out of emerging markets quite a bit. I did a report last year that compared Findex reports, World Bank's Findex indexes, to CBDC developments. And I found that emerging markets that are motivated by financial inclusion are actually moving at a much faster speed than those that aren't. It's an interesting paper. It's coming out next year in a journal, and I'm happy to share it after. But really, financial inclusion has become sort of a talking point for countries. At the Atlantic Council, we're interested in exploring this motivation a little bit more because current sort of definitions of financial inclusion and exclusion don't really include digital assets. So really, how do we change those definitions, expand them, and is that really happening? I don't know, it's too early to tell, but that is definitely something that countries are extremely motivated by when they start their CBDC projects. The other thing, and China has a very good articulation of it, which is why I'll give this example, is introducing some kind of redundancy in their domestic payments market. A lot of payments markets in advanced economies are dominated by one or two payments players. I can think of Visa and MasterCard. But in China's context specifically, it's Alipay and WePay, an app by WeChat, and Tencent's app that accompanies WeChat. And really, in China, it's about improving redundancy and resilience in its domestic payments market. It's introducing another payments player, introducing some kind of competition. And it's not just China's motivation. A lot of other countries are interested in doing this as well. The third thing is about increasing efficiency, and this is related to sort of one of the technological advantages of CBDCs, which is lower transaction costs. For every transaction that you can have using a CBDC, studies suggest that you can reduce costs by 1 to 3%, which in the aggregate is a pretty big number. But really, the way that it manifests, this motivation manifests, is a lot of times in remittance and cross-border payments, which is why you'll see a lot of body of work coming from the World Bank now, which is interested in looking at this motivation specifically. The other motivation, obviously, we talked about earlier was the pandemic-induced stimuluses, the easy flow of some kind of fiscal benefit in the future, but also some kind of monetary policy in the future, and the ability to introduce programmability in money is something that some governments are interested in and often hesitant to talk about, but because it talks about sort of using and manipulating data. But hopefully we can get to a place today where we can think about programmability of money in a more nuanced way than we do before. And I think of this as a negative motivation. A lot of countries are interested in mitigating the threat that private cryptocurrency poses to their monetary sovereignty. I don't think countries have been very successful when they've set out to do this as a motivation. Nigeria is a very good example. It very explicitly wanted private crypto out of its economy. But what happened since the launch of e-Naira is that private crypto has increased in adoption, as has CBDC has had some adoption, but really they haven't been able to get crypto out of their economy. So when countries are motivated by it, I don't think it's a very successful way of designing a CBDC. I don't think a CBDC would accomplish this, but happy to talk about this a little bit more. And really in this this very complicated graph, I just wanted to get just one idea across, which is that all of these motivations are filled into the bucket of technological functions that we think a DLT-based system could provide us, which is faster, cheaper, and safer transactions at the end of the day. So we talked about smart policymaking, fiscal stimulus, financial inclusion, redundancy. A lot of economies are also interested in lowering the cost of cash handling. Jamaica is a good example of it. I think Jamaica introduced the Jamdex this year, and it said that it could reduce $7 million in its cash handling costs. So that's something that countries are interested in. It's just about lowering costs at the end of the day. A lot of countries, especially in the EU, are interested in not excluding their aging population out, which is dependent on cash in some way. Christine Lagarde, in a conference in Frankfurt, was talking to us, and she said she still liked using cash, and a lot of people do. So in a cashless economy, where are they supposed to go? Their comfort levels with debit card and credit cards are low. So really, they're thinking of CBDCs as some sort of a complement or a substitute to cash in some economies. And finally, programmability of money, which is something we talked about earlier. But really, all of these motivations fall into the idea of what kind of technological functions could they could a CBDC achieve. We get to this question of what do we want our CBDC to look like? And this is going to get into some questions around design and programmability. And I hope this is a wide a definition of an ideal CBDC, and I'm hoping to add more throughout the day today. But really, this is what my idea of a CBDC is. The first thing is that people think the CBDC should have features of cash. It should be legal tender, obviously. It should be convertible one-to-one. It should have the ability for us to conduct small values of transactions and large values of transactions. It should have a retail component in some ways, which will allow us to conduct daily transactions like buying cappuccino, but also a wholesale component in some countries' conception, which allows for bank-to-bank transfer of value. It should be easily accessible. That is how you're going to achieve a financial inclusion motivation at the end of the day. And what easily accessible means for some countries is different. Sometimes easily accessible means even without a bank account, you should be able to use CBDCs the same way that I can use cash without a bank account. Now, this is a hotly contested area of CBDC development. I haven't seen a very well-developed or a high-level model that takes away intermediaries like commercial banks. So that would provide easy access to, say, a federal bank account. But recently, India released a white paper on both its retail and wholesale CBDC model and said that at low levels of transaction level, the retail CBDC could be a direct model and not an intermediated model. But I'll say this is sort of a controversial area of development in CBDCs. Obviously, it should provide the anonymity that cash provides. This, again, is also a hotly contested area of development on CBDCs. I think most countries have come to the conclusion that privacy is good, but how they're going to achieve privacy is yet to be determined, and there's a lot of design options available. We'll talk about this in a second a little bit more, but I just wanted to lay out what we want from CBDCs. And then this goes into the easily accessible part, which is that it should be able to be continuously available and not dependent on just sort of the availability of internet at the end of the day. It should also have some features of deposits, right? Some features of digital money or commercial bank money that we have in deposits. One of those features is interest bearing. Now, again, a controversial point. But really, why would I keep money in a bank account if I'm not earning interest on it? This is a hotly debated area, and most models don't have interest bearing CBDCs. Again, easily accessible, instant payments, which could be achieved by the speed functionality of the technology. It should enable digital transactions in some way, the same way that I can link my bank account to my credit card payments or things like that. It should be traceable. That's sort of the big advantage of digital money. Um, and these transactions should be reversible. Now, this is a hotly debated area as well, because a lot of blockchain-enabled transactions are not revocable. That's why you see a lot of times when money goes away, it just goes away. And we're trying to figure out what design could, sorry, um, achieve that as well. Now, this is again a hotly debated sort of feature that a CBDC could have, but could it enable some kind of fractional reserve lending? I have yet to see a model that does that, but it's something that we could want in the future. So really, the ideal CBDC would have features of cash, features of commercial bank money or deposit, but it would also have something more, right? Because that's the whole point of going through a technological innovation process. Obviously, we've talked about cheaper, speed of CBDCs. It would be more there's a theory that decentralized architecture could provide better cybersecurity and infrastructural resilience over time. And finally, it would be interoperable in some way with other kinds of monies and assets. It would be interoperable across borders. It would enable cross-border transactions without risks that the current system has. This is something that we would ideally want to achieve with the CBDC. There's some theories, and Project Hamilton from the New York Fed is a good example. That provides open source code for CBDC. They think that it should enable some kind of open banking features and think about banking in a new way. But it should also limit surveillance and enhance privacy. And this goes into the privacy and anonymity part. For a lot of countries, personal data protection is an ideal that they're still trying to achieve, and they don't want CBDC to take that away. But really, what I saw happening until last year was this conflict between privacy enhancing CBDC that could also be safe and maintain AML KYC requirements. We wrote this report. It's called Missing Key. Sorry. The challenge of cybersecurity and CBDCs. And really what we found was that privacy enhancing technology was actually also better from a cybersecurity standpoint. It could limit some cybersecurity risks. So I really encourage people to look at that paper. We can talk about some of the findings as well. Sorry. So really, we are enabling CBDC to have features of cash, features of deposits, and some more features. And some of these design choices are easy to design for. Other, like offline ability, like privacy enhancing design that maintains AML KYC, is a little bit harder. But really, this is the areas of debate that are happening around design features and what an ideal CBDC would look like. A question I get very often in the United States, in a lot of other countries, is CBDC ideal? Should we not just use deposits? Should we not just use private kinds of money that are coming up, especially stable coins, to achieve the same roles? I wanted to spend like a little bit of time over the next 2 slides talking about what is different about CBDCs from this other kind of, we'll call it monies for now. And why they could achieve more, and what should we be focusing on when they achieve more. The first two columns here really are about issuers and liability. I think that is sort of easily understood. The second classification about where would it sit legally, obviously a lot of countries are including the United States, are conducting a lot of judicial studies on whether their central banks can even issue CBDCs. But really, at the end of the day, it would be some kind of legal tender. and a different kind of legal tender than coins and currency and cash. Stable coins, we've seen some emerging regulation, most notably MiCA, that looks at them as e-money tokens. Some countries try to look at them from private money. But there's going to be a lot coming in the next year about how to classify stable coins and what their use case is going to be in some economies. There's technological advantages we talked about. CBDCs will have some element of permission DLT and elements of non-DLT elements as well. Stable coins are DLT enabled for the most part. Commercial bank money just relies on general ledgers here. The advantage of the DLT technology, like we talked about, is speed, transparency, and cost. But it's hard to enable DLT for all features that we would want a CBDC to do, which is why countries are looking at hybrid models. Architecture, again, something we've touched on, but most CBDCs are going to have some kind of two-tier intermediated architecture. Stablecoins are available on chains and exchanges. They're available on some kind of non-bank wallets. In the US, PayPal-enabled wallets help you hold some kind of crypto as well. Prudential risk, now this is an important difference between CBDC and stablecoins because it will be legal tender. There'll be no counterparty risk, and there's going to be a prudential regulator, like there's going to be a deposit insurance that covers your CBDC at the end of the day. This is where I think stablecoins are markedly different. There's currently no prudential regulatory authority for most stablecoins, and there's liquidity risk that comes out of it. We've seen some cases of a bank run-like scenario happening for stablecoins, most notably Terra Luna over the summer, and there's really no recourse for consumers there. There's something that comes up pretty often, which is that stable coins are going to be decentralized, they're going to be permissionless, and CBDCs are going to limit permissions and have a centralizing authority. I want to debunk that a little bit. Stablecoins have an operator that control the supply and demand, that control the supply of the tokens themselves. They also have a, sorry, as you can see, I'm still recovering from COVID. Really, there is a sort of centralizing entity at the head of most sort of popular and famous stablecoins. And the governance for CBDCs will be kind of like commercial banks. They're going to have something like a Financial Stability Council, a central bank, and others that are going to be involved in the governance. Right, AML KYC. For commercial banks, obviously it will be as it is right now, which is that a commercial bank bears the risk of AML KYC compliance. In an intermediate CBDC model, that would be the same. In stablecoins, AML KYC is borne by the stablecoin issuer. When it comes to privacy, there's some privacy enhancing design choices. I know we'll talk about zero knowledge proofs today. Really, a lot of countries are looking at CBDCs as a way to enhance their privacy from their current systems. But yeah, there is a risk of surveillance from authoritarian governments, and China CBDC gets talked about in those ways quite a bit. But there are privacy enhancing designs available if countries choose to go that route. Stablecoins, I would say, are pretty much the same risk of privacy. There are privacy design choices available, but there's a risk of surveillance coming from private entities. And this has been more realized as countries have realized that social media apps or things like that also sort of violate privacy norms in a lot of ways. So really, the risk of privacy between the two is coming from a governance perspective or coming from a private country's perspective. Now we come to sort of the technological parts of the difference across the three. The transaction or settlement speed. I like using the Project Hamilton example, although it's a wholesale CBDC and it's direct, so almost certainly the transaction per second is going to be lower, but they give a huge range. So it's between 1.7 million to 170,000 transactions per second. China CBDC can go up to 30,000 transactions per second, just for comparison's perspective. Stablecoins, it's really hard to get information from stablecoin companies on transactions per second, but really it depends on volume of transactions, and they're approaching stable and high transaction speeds as well. Commercial bank money in countries with fast payments networks, and I'm making that distinction because the United States does not have one. Settlements are almost instantaneous. In Visa and MasterCard type scenario, Jesus Christ. Sorry.
If you deserve to stop 1 second, no problem at all from our side. We understand. Yes, thank you so much. You see, COVID is a force around us still, huh? But we need to cope with it. No problem at all.
Yeah, of course. Thank you.
Thanks to you for the resilience.
Okay, so transactions per second. I'll go slower. Maybe that will help. These are MasterCard.
We have a proposal, Ananya, if you want. We can anticipate our coffee break, and then we conclude your speech, if it's okay for you.
I only have about 5 more minutes, so I think I'll get through this.
Okay, as you prefer, sure.
Yeah. So Visa and MasterCard, they do about 1,700 transactions per second. Really, the comparison of transaction speed is what I wanted to get across here. Cross-border applications, we've talked about how costs could reduce, and countries are interested in wholesale CBDCs that could settle transactions across borders. Enbridge is a good example of it, and the BIS Innovation Hub is serving as sort of a link there. But there is, when it comes to cross-border applications, a risk of digital dollarization, and this exists for stablecoins as well. But stablecoins, the cross-border use case, is really going to be on a retail perspective. I find it hard to envision a central bank that would be willing to conduct forex swaps on the stablecoins, but it's just a maybe kind of scenario there. And then finally, the reason cross-border applications I brought out is because we currently have really high fees. Settlement risks are very high, and fees really are dependent on where you live. So they can go from 1% to about 14, 15%, which is really difficult when a lot of your remittance flow comes across the borders. Then there's about programmability. We've talked about this before. It's possible in DLT-enabled tokens like CBDC and stablecoins. This is probably a sign I shouldn't talk as much. And finally, and this is a point I really, really want to make, it's about trust. CBDC would be trusted as legal tender. It would have prudential regulatory authority. And stablecoins have recently been subject to a lot of distrust, especially over the course of this month, as the crypto industry as a whole faces a lot of contagion volatility. There's also been bank run scenarios like Terra Luna case, and a lack of regulation and regulatory clarity that have created some distrust. So at the end of the day, CBDC could be a trusted mode of transfer of value over private kinds of stablecoins, is what I think. And we'll go to conclusions. But really, what I think, and this is completely coming as my opinion, is that a CBDC could offer some advantages over stablecoins. And like I said, the most important part of that advantage is that it is a stable, trusted form of money. It's legal tender. The question I get following that is that, what about regulatory clarity? Do you think a regulatory clarity can address risks of stablecoins? And I think some of it can. I think we can put some regulatory prudential regulatory authorities on stablecoins. We can clarify what it is that we mean by stablecoins, because in some cases it's fiat pegged. In some cases, there's a lot of commodities that are pegged, and they could be algorithmic. So really, there could be definitional clarity that regulation can offer as well. But I think that inducing trust in stablecoins is going to be a really hard battle to win. And at the end of the day, I don't think they're not going to exist. I think they're going to exist as speculative assets and not as a way of promoting money. We did this project this month, which is a crypto regulation tracker, and it really looks at how countries are looking to regulate cryptocurrencies and stablecoins in their jurisdiction. And a lot of countries are confused about stablecoins because they exist in a sort of middle space. I think of them as a second generation crypto product. But a lot of regulation is incoming. I still think that that is only going to solve a limited, a limited sort of problems that we have with stablecoins. I do think that CBDCs and stablecoins can coexist, and they're probably going to be transferable and interoperable with each other, and people are going to use both of them. But it's hard for me to see the use case for stablecoins from sort of a large wholesale payments perspective. And like we saw on the table before, CBDCs are comparable to commercial deposits and cash, but they can offer some kind of unique tech advantages in the form of speed, transaction costs, programmability, which can further economic policy goals. And we'll come to those goals in the next slide, but I want us to take that away from the table that I went through very painfully, that CBDCs are different and can offer advantages over stablecoins and commercial deposits. But it's not all hunky-dory. Like I said, there's a lot of design options that are controversial, and they can introduce new kinds of risk in an economy. They can introduce new kinds of privacy risks, new kinds of cybersecurity risks, and think about dollarization if they're not sort of created responsibly and with which is why a lot of cross-border projects have a do no harm principle. It's hard to assess what dollarization is going to look like in practice because these projects are still in their infancy. But these threats really exist. Um, the most important thread, and something that I stay up at night thinking about, is that I look at 112 CBDC models, and they all use 112 different kinds of technologies, some of which are not interoperable. So this technology that has an inherent motivation of reducing friction can actually introduce some kinds of friction and fragmentation if they're not interoperable with each other, especially in a cross-border payment mechanism. So this to me is something that keeps me up, really, is that we're introducing all these CBDC models. At the end of the day, are they even going to work with each other? We're not sure yet. A lot of these projects are in their infancy, and countries tend to prioritize their domestic goals, which happens to be financial inclusion, improving redundancy, over international goals, and can be myopic in some ways, I think. Something I want us to get across, and I think will happen over the course of the day, is that the design space for CBDCs is large, which is why I wanted to go through what an ideal CBDC looks like. There's a range of options to choose from when it comes to privacy, anonymity, custodial options, offline functionality. And these are not easy questions to answer, but they are easy questions to design for. I think policymakers mislead conversations with technologists with policy goals in mind, and I have that highlighted because I talk to a lot of engineers and technologists, and they tell me that we can continue to experiment and design different ways of doing CBDC, but we need to know what it is that you want. And we're at this juncture of CBDC development where we're kind of unsure of what we want CBDCs to look like. And I think that's what an experimentation process looks like. But from a technologist side, it's often frustrating. And that's why these conversations must happen in tandem. Policy must affect technology in some ways when it comes to CBDC development. And finally, because I think so much about interoperability, we must illustrate models of interoperability when it comes to CBDC. I think of interoperability both horizontally with existing kinds of assets, including non-crypto and crypto assets, and financial structures that already exist. So in my PayPal account, as well as my Bank of America account, as well as vertically, right, with models outside of one's country so that we can achieve the real promise of CBDCs. I do think CBDCs have a lot more advantages to offer than private kinds of crypto, as well as the existing commercial bank deposits. So that's kind of my perspective on it, and I'm really looking forward to talking about any questions that you might have, as well as anything else that we can talk about today. Thank you.
Thank you very much, Ananya, especially for the big effort that you did, and you know, as I said, COVID is still around us, but thank you, you know, once more for the willingness to reach until the end and the conclusions. Unfortunately, now we don't have time for questions, but I'm sure that participants can somehow reach us with any question mark we might have. But once again, many thanks to you, Ananya, for raising such a comprehensive overview of what CBDC entails. And I've written down a phrase that you mentioned, that as policymaker must lead conversation with technologists with policy goals in mind. That's, to me, the key of the development in such a space. Thank you once more. Now, 8 minutes of a quick coffee break to stretch a bit, and then we will reconcile at 3:30 sharp. See you in a while. Thank you so much again.